To the mutual fund tutorial part 2, and in this session we will be learning different types of mutual funds, the advantages and disadvantages associated with mutual fund. The types of mutual fund can be broadly classified into two categories. One is by asset class and another one is by structure and by goals. Now let us look at one by one. By asset class. So here the mutual funds are classified on the basis of asset in which the funds collected are invested. There are three types. One is equal equity funds, debt funds and hybrid funds, or we call it as balanced funds. Here we will take one by one. Equity funds. The amount collected by way of SIP invested primarily in stock markets, primarily in stocks and shares. The objective of investing in equity funds is capital appreciation, and there is a higher degree of risk coupled with higher potential risks, potential return. Here we should understand the concept of investment strategy. We have two extreme. Let me explain the two extreme first. One is conservative strategy, other one is aggressive strategy. Here conservative strategy, we mean a normal people who are risk averse will invest in this type of securities, and conservative strategy is characterized by low risk, low return. And equity funds is an aggressive investment strategy which aims or which has high return possibilities. At the same time there is a high risk also. So investing in equity funds will result in either high risk or high returns also. The examples of equity funds are large cap funds, mid cap funds or sectoral funds. The second type of asset class is debt funds. The funds collected are invested in fixed income securities or fixed income instruments. The instruments like government bonds or gilt-edged securities or corporate or company debentures. And the pure or primary aim of investing or choosing debt fund is that regular income and capital preservation. Just it is totally against equity funds which aims for capital appreciation, whereas debt funds are aimed at capital preservation. Normally people say that more funds should be allocated to debt and less should be allocated to equity funds, because more funds can be preserved and take we can take a risk only for the remaining portion of investment, and lower risk of course, and definitely it will give stable returns or regular income to the investors. And the third category is that hybrid, which is the mix of both equity funds and debt funds, and it is called as balanced funds also. So the amount collected from mutual fund investors or unit holders will be invested in mix of both equity funds and debt funds. And why do we choose this? The reason is the balance of growth as well as income, and it involves a moderate risk coupled with moderate returns. And overall mutual fund is a instrument or a kind of investment which gives moderate risk, moderate return. Now let us look at the different types by structure and by investment goals. By structure, we have two types of funds. One is open ended and close ended. By the words open ended, we mean investor or unit holders can buy and sell units anytime directly from the fund, and no fixed maturity or no lock in period. That is why it is called open ended funds. And close ended funds is a fund which has a fixed number of units are sold in an initial offer, then traded on the stock exchange. Then the third category or the second category in the structure is by investment goal. There are growth funds, income funds, tax saving funds, and index funds. So growth funds are the funds which focuses on capital appreciation. So capital appreciation is there in growth fund. Income fund which aims at giving a regular dividends or regular income or regular interest to the unit holders. And ELSS stands for equity linked saving schemes, which offers uh, investors a possibility of tax deduction. And index funds are indexed in where various market index or indices like S&P 500 or Nifty 50. Now, can we look at the example of mutual funds from a real-time example? And now, this is the portfolio valuation report. Here we have regular growth fund, Aditya Birla multi-asset allocation fund, Aditya Birla Sun Life Consumption Fund Growth Regular Plan, and this is regular growth, and this is regular growth, and this is again HDFC Manufacturing Fund and HDFC Mid Cap. We had seen the different types of asset, mid cap, large cap, etc., and regular growth. And my dear viewers, just understand, this is the portion amount invested 1,42,858, but the current market value as on 1st August is 1,49, and gain or loss is plus 6,194, and absolute return is 4.34, and total return is 8.7 percentage. And this is the statement which will give asset classes. And here equity, no bonds, no balanced, only equity funds. We had seen 100% in equity. Okay, and let us look at the individual script wise or unit wise. The first one gives take for example positive, and only HDFC Defense Fund regular income is giving a negative return. Annualized return is minus 2.3. This is the portfolio. Take for example the 1,42,858 in amount is not invested in single fund, but it is invested in 1 2 3 4 5 6 7 funds. Therefore, just look at this is a diversification, and this loss, we have only loss in one item, and all other funds results in a profit. After looking at various types, after looking at the profit or the percentage of profit, now I will look at the various advantages of investing in mutual fund. Professional management. We had seen how investment works. So investors gives small money to uh, fund managers, and fund managers manage professionally. So a common man, it's not managed by common man, it is managed by a professional. So what is the advantage when my fund is managed by a professional people? Then automatically there is a lesser degree of getting loss, And the second one is diversification. The mutual fund, unlike investing in shares by individual, when it is a systematic investment plan in mutual fund, all the collected funds, the pooled money is diversified, which means it is invested in various assets classes, various companies, various types of funds, so that one loss can be compensated by profits made by another. Again, it is a disciplined investment. The advantage is that systematic investment plan, you can start planning by even amount of 500, and when it is electronic, when you give ECS system, then automatically every month the fund or the money is auto debited from your bank account. And of course we can see what is the fund value through the statement also. Then liquidity is an important part or important feature of any investment. The investor will always look for liquidity. Then what do we mean by liquidity? Can my investment be converted into cash? If the answer is yes, then those assets are liquid assets. Those investments can be called as liquid investments. So, the mutual funds, take for example, can I sell my land and convert them into cash within 2 days or 1 week? Is it possible? The answer will be definitely no. But the mutual fund can be sold anytime to meet out my personal commitment, to meet out any expenditure. That is why it is its liquidity is one of the major advantages of investing in mutual fund. And cost effective, less cost is involved in the process of investment. And the last part is disadvantages of mutual fund. And of course, when it enjoys so many advantages, it too undergoes and it too has certain limitations or certain disadvantages. And cost, definitely costs are involved. You have to pay fees when you are selling your unit. And capital gain tax, when you sell the units, you will have to incur capital gain tax, you have to pay. Then there is a higher degree or higher possibility of over diversification. When it is, take, I had given you the example of 6 or 7 funds, right? And if it is more than 10 or more than 15, then there will be a mess that will end up in a mess. There is a, again, mutual funds, there is a potential for over diversification. Over diversification may be result in negative return also. And the very important part of our disadvantage in investing mutual fund is no control over this portfolio. I am giving my money to Geojit, for instance. Then Geojit invest my money into various assets, and I do not have any control over what where my money is being invested, the where is invested, when is invested. So I don't have any control over all these questions. And finally, all the investments will have market risk. Then mutual fund is not an exception to it. You can see an ad in the television. After the ad, it is subject to market risk. And if the market is good, you will, your fund will perform well. If the market is bad or dull, your fund will perform low. And again, if the market is dull or down, the positive note is that